Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about KAYNE Anderson BDC Inc. Annual Report. KAYNE Anderson BDC Inc. is a business development company that provides various financial services to middle-market companies. The company's primary focus is on making debt investments in the form of first lien senior secured, unitranche, and split lien loans. These investments are typically made in privately held companies, providing them with much-needed capital for growth and expansion. In addition to these core investments, KAYNE Anderson BDC also invests in higher-yielding assets such as second lien loans, last-out or subordinated loans, non-investment grade broadly syndicated leveraged loans, high-yield bonds, structured products, real estate-related debt securities, and equity securities. These investments are made opportunistically to maximize returns for the company's shareholders. The company's investment strategy is designed to provide a diversified portfolio that balances risk and return. By investing in a range of asset classes, KAYNE Anderson BDC aims to generate consistent income and long-term capital appreciation for its investors. Overall, the company's business model is centered around providing financial solutions to middle-market companies while generating returns for its shareholders. The list of businesses and services provided by KAYNE Anderson BDC includes debt investments in first lien senior secured, unitranche, and split lien loans, second lien loans last-out or subordinated loans non-investment grade broadly syndicated leveraged loans high-yield bonds structured products, including CLO liabilities, real estate-related debt securities, equity securities purchased in conjunction with debt investments, other opportunistic investments. Unfortunately, I do not have access to the text you provided. However, I can still provide a general essay on what may cause a stock's price to remain stagnant over a period of time. The stability of a company's stock price is often influenced by various market and economic factors. One possible reason for a lack of significant change in KAYNE Anderson BDC Inc.'s stock price over the past year could be the overall performance of the economy. If the economy is experiencing a steady growth rate with minimal fluctuations, it may not have a substantial impact on the company's stock price. Another factor that could contribute to a stable stock price is the company's consistent financial performance. If KAYNE Anderson BDC Inc. has been consistently meeting or exceeding its earnings expectations, investors may be less likely to make significant changes in their investment decisions, resulting in minimal fluctuations in the stock price. Additionally, industry trends and competition can also play a role in determining a company's stock price stability. If the company operates in a mature market with low growth prospects, it may not experience significant changes in its stock price. Similarly, if the company faces intense competition from other players in the same industry, it may struggle to make significant gains or losses in its stock price. In conclusion, there could be several reasons why KAYNE Anderson BDC Inc.'s stock price has remained relatively stable over the past year. A combination of economic stability, consistent financial performance, and industry trends may have all contributed to this phenomenon. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline in the financial industry can be attributed to several key factors. Private middle market loans have been a significant contributor, with a revenue growth rate of 10.4%, excluding non-income producing debt investments as of 2025. This is likely due to the increasing demand for private lending services among small and medium-sized businesses. Another factor driving revenue growth is broadly syndicated loans, which have seen a revenue growth rate of 6%. The weighted average loan-to-enterprise value (LTV) ratio of 28.2% as of December 31, 2025 suggests that these loans are being used to finance larger and more established businesses. The overall trend in debt investments is also positive, with a revenue growth rate of 10.3%, excluding non-income producing debt investments as of 2025. This indicates that the demand for debt financing remains strong across various industries and company sizes. The financial performance of the company underwent significant changes between 2024 and 2025. Net income increased during this period, due in part to a $773,955 increase in the fair value of Level 3 investments. This growth can be attributed to purchases and the accretion of discounts on these investments. Profit margins also saw an improvement, with with various expenses contributing to this change. Management fees decreased from 1.98% to an unspecified rate, while incentive fees dropped from 10% prior to the IPO to 1.57%. Interest payments and fees paid on borrowed funds remained high at 6.89%, but other expenses were minimal at 0.39%. The company's investment strategy and valuation techniques likely played a role in these changes. The decrease in incentive fees, in particular, may have contributed significantly to the increase in profit margins. Overall, the financial performance of the company improved between 2024 and 2025 due to a combination of factors, including increased investment values and reduced expenses. The company's debt level and interest expenses have undergone some fluctuations over the past year. Initially, there was a decrease in total debt from $1,675,000 to $1,130,000 between December 31, 2024 and December 31, 2025. However, this trend is contradicted by other information that shows an increase in total debt from $442,000 to $848,125 over the same period. A closer examination of the company's debt structure reveals some inconsistencies. The principal outstanding on notes increased from $75,000 to $275,000, while the corporate credit facility saw a decrease in principal, outstanding from $250,000 to $135,000. On the other hand, the revolving funding facilities experienced mixed results, with one decreasing and another increasing. In terms of interest expenses, there is evidence that they have increased over time. The interest expense rose from $52,314 to $76,361 between December 31, 2024 and December 31, 2025. This increase in interest expense may be attributed to the higher average borrowings, which increased from $624,464 to $1,054,360 during the same period. Despite these fluctuations, it is clear that the company's debt level and interest expenses have undergone significant changes over the past year. While some aspects of the company's debt structure have decreased, others have increased, resulting in a net increase in total debt and interest expense. The management's outlook on the company's strategy is reflected in its annual report. The company has made significant investments in various companies through its debt and equity investments, indicating a focus on growth and expansion. The use of valuation techniques by the company's advisor suggests a commitment to transparency and accuracy in determining the fair value of Level 3 investments. The credit facility information highlights the company's access to capital, which is essential for its operations and future plans. The inclusion of consolidated financial statements provides a comprehensive view of the company's financial performance, enabling stakeholders to make informed decisions. Overall, the report suggests that the management is prioritizing growth, transparency, and financial stability in its strategy. The company has a history of paying dividends to its shareholders. Over the past 3 years, the dividend payout has been consistent, with 6 payments made annually. In 2023, each share received $2.06, while in 2024 it was $1.70 per share. The most recent payment in 2025 saw each share receive $1.80. In addition to paying dividends, the company has also engaged in share buybacks. Between January and February of 2026, a total of 1,020,586 shares were repurchased at an average price of $14.25 per share for a total amount of $14.5 million. This is part of a larger trend, with 3,302,477 shares bought back in 2025 alone. But that concludes the financial summary for KAYNE Anderson BDC Inc. Feel free to comment below, and I will be happy to answer them when possible.